where I'm the first to tell people now. It's like, listen, you can do it, no doubt. But do you want to? Because you don't understand the day-to-day challenges that come from it. So it may be easy, and we're not reinventing the wheel. We're not, as I said before, doing brain surgery. But when you add all that up, it's not as easy as it looks.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, is John Cohen. How are we doing?
We're good. We just made the final improvements and sign off for our new podcast studio in the office. When we get back to unquarantine life.
Yes.
So I approved it. I ordered everything yesterday. And like always, I waited till last minute. So 2 of the chairs are no longer available, but I ordered everything else. And I spoke to my friend. I said, do we have to change something? And she's supposed to be figuring it out today. So we'll see what happens, but it should be fun. I'm excited to get it ready.
Yes, I almost forget what it feels like to be in person with you doing a podcast instead of by myself here, because it's been 3 months now, which is crazy because it doesn't feel like it. It's gone so quick. But hopefully things will start opening back up and we can start getting in there and using it. How long is it supposed to take?
I ordered everything. Is supposed to, believe it or not, all the shipping was supposed to be like June, like first week in June. So no delays there. Then we got to take everything out of the office that's in there. That will be the biggest delay.
Yes.
Some things have to be put back together, and then we just got to install like the back wall. That's on us.
So maybe sometime next year.
Sometime next year we'll wrap it up. I'm pushing to get it done quickly. I'm going to be in there, hanging shit on the wall, and I'll do it. But
all right, perfect. That way I
get myself out of this house.
Yes, exactly. All right, awesome. But I do want to jump in today. I think we got a great guest on, a guy known for some while, but haven't really caught up with in the last year or two. But watching his journey from afar, so really excited to hear how things have been. Dig into more on what he's doing, and I think people are going to get a ton of value, insights, and nuggets from him. So with that being said, Dan, thanks for joining us today.
Thanks for having me on, Chris. Looking forward to sharing with the audience and providing as much value as I can. So thanks for having me on.
I love it. So just kick us off. Can you take us a little bit through, who you are, where you're from, kind of your background and your journey to where you are today?
Sure. So, right now, we have, I have a company called passiveinvesting.com. It's a private equity real estate firm, and we acquire large apartments primarily in the Carolinas, but we do have a few acquisitions in Texas as well as Tennessee. But I'm located in Columbia, South Carolina, and one of the main reasons why I got into this acquiring real estate was really from the tax side of things. So it really wasn't necessarily because I wanted cash flow. Obviously, that's obviously nice, but the main reason was from the tax benefit. So kind of going back a little bit of where I came from to get to this point. I'm a chiropractor by trade. And when I was in chiropractic school, I started my very first company called shopanatomical.com. And we actually sell all types of skeletons and skulls and brains and hearts and all kinds of plastic models that, doctors and universities and labs and things like that need to be able to study off of, but also to teach patients on. And so when I was in chiropractic college, my first quarter that was in chiropractic college, all the students were complaining about how pricey. It was actually listed at $189.95 for the spine model that was in the bookstore, which we all know in bookstores at these colleges, they always puff up the prices, right? It's always way too expensive. And so I went to the bookstore, looked up on the box, who the manufacturer was, found one of their distributors online, reached out to them, which, kind of today is actually that distributor is one of my largest competitors, which is kind of cool. But I reached out to them and I said, hey, what could you do if I can get an order of 20 of these spine models? What kind of price could you give me? And they said, we can sell it to you for $65. And that would include shipping. And so I was like, well, this is great. So I was like, I don't want to price gouge my friends. I'm just, trying to get a good deal for these guys. But I was like, I'll mark it up by $4.95, like $5, right? So I sold it for $69.95.
You're
put
way
order
too kind.
forms together. Say again?
I said, you're way too kind. $5. I was expecting at least to go to like 100.
I know the story gets better though. So it went from just like a couple $100 because for the first week I put the order forms together and everything. And these are, of course, like broke college students, like most people in college, right? And so I didn't want to take a bunch of IOUs and things like that from these students. So I was like, here's an order form. You can pay me a cash check. Here's a link to PayPal if you want to pay me that way, if you want the credit card. And so by the end of that first week, I had 80 orders of these spines with cash up front. And I was like, wait a minute. What if I can go outside of trying to go to the distributor, just go straight to the manufacturer? So I did. So I reached out to the manufacturer and said, hey, I got this order. I want to place an order of 80 spines. What can you do for me on the price? And they said, we'll sell it to you for $42.48. And I'll never forget that, of course, because it was a game changer, right? Mm-hmm. $42.48. And that'll also include free shipping. And I was like, that's sweet, right?
Yeah.
So I did that the first week. And then 2 weeks later, sold another 40 spines. And then because I was able to order so much quantity, the manufacturer said, hey, well, do you want to just become one of our dealers? And so I became one of their dealers, got access to all 2,000 plus of their products. And then since then, I've built out a website and we sell stuff all over the country and all around the world. And we do 7 figures of revenue every year with that. But that business that I first got started with helped me get my first chiropractic clinic started as well. So I started that first clinic, didn't have to take on any debt. And fast forward to today, I actually have converted those chiropractic clinics to really medical clinics. They're non-surgical orthopedic specialty medical clinics. We have medical doctors, nurse practitioners, and a team of about 50 employees that work with us on that team, and allows us to be able to expand. It's a lot of being able to convert it from chiropractic to the medical allowed us to be able to reduce the footprint of the clinics. And it allowed us to be able to expand from 1 clinics to 4 clinics. We now have 4, one here in Columbia, South Carolina, where I'm at, one in Charleston, Greenville, South Carolina, and North Augusta. And so obviously, having those businesses and all of them are debt free, you're obviously making some cash off of those. And so I, instead of having to pay the money to the government, started investing inside of real estate. And that's where we are today.
I love it. So can you take us through, because I think, one, it's a fantastic story, but one thing that I love about people is that most stories I hear, and I'm assuming yours is going to be somewhat the same, is that, we always tell the story and it sounds like everything goes very quickly. But I'm sure those early years, things didn't just shoot up to, a clinic overnight. How was it, being in, whatever school you were in and building this business probably on the side? I'm assuming you've finished school. You didn't say, but I'm assuming you finished school. So how was it building this thing on the side? How long did it take you to really make it into, a real business that got up to, 7 figures a year in revenue? And then, what was it from the first one to the second clinic and so on and so forth?
Sure. So in the very beginning with the Shop Anatomical, I remember in college, in chiropractic college, actually going, I would purposely schedule my classes so that I would be able to get to the school early in the morning. I go to the cafeteria and I start to build out the website, build out the database, because I one of the things I had some experience in was actually doing that aspect. And so instead, I didn't have any money to hire somebody to do that, so I just started doing it on my own. And when so I'd go to the classes early, 7:00 in the morning is usually my first class was. I'd get to the cafeteria when it opened at like 5. So I'd sit from like 5 to 7 and just get, work done. And then in between classes or on breaks, instead of going out in the hallways and chattering with friends and things like that, another reason why I got in at the early class is because I would park my car on the front row. So that when in between classes, I can just go jump into my car. And it was an SUV. It was a Mercury Mariner, silver Mercury Mariner SUV.
That's a throwback.
Oh yeah. And I found online a laptop stand that would attach to the passenger seat. Mm-hmm. So I installed a laptop stand, and on the right side, in between classes, I would go in there and I would process customer orders. I would take phone calls, respond to requests, all that kind of stuff. And then so that was one of the biggest things I did in the beginning was I just bootstrapped it, just did it all on my own, and started originally selling things on eBay at that time, because eBay was really big back then.
When was this, by the way? What year?
Say again?
What year was this?
I think you're going to ask me what eBay was, because
no.
It is.
No, I know what eBay is. What year is this?
No, that was 2007, 2008. When that happened. Great. So, I mean, for those of you who don't remember, that's actually the year that iPhone was invented. I mean, the first iPhone was 2008. So, I mean, it's amazing when you think about the iPhone these days, and that's like the only thing a lot of people have, and they think of, oh, I've always had that. And it's really been, it's a fairly young technology.
Yeah. No, I think that's awesome. And then obviously, built it up, I'm sure, several years. When did it get to the position of, hey, I'm getting absolutely murdered in taxes. I've got to figure something else out. Again, what year was that for timeline, and what was that process like for you? And, how did you go about, deciding real estate was an avenue you were going to explore and ultimately put some money into?
Yeah. I mean, it didn't. So the shop anatomical business started out selling, 5, 10, 15,000 a month. Then it started just kind of grow month after month. And I would say by the end of the second year is when we were at the point of being over 7 figures of revenue. So the first year was probably maybe $500,000. The second year got over $1 million in revenue. And from that point, at that point, I mean, I'm in chiropractic college. Like, I'm not even thinking about taxes. I got to write a few checks here and there and things like that. And yeah, I would say even then, if I would have known what I know now, I would be in a better position where I am now. Not that I'm in a bad position now, but I'd be even better, right?
Sure.
Because there were so many times then that if I actually thought that I could actually knew about the ability of investing in real estate, because my whole thought was make money from the business, take out what I need to live, and then the rest of it just pour back into growing the business. And that's how I've made a lot of my businesses successful is I don't take a lot of money off of them. I actually pour them back into growing that business, continuing to build it. And so once I graduated chiropractic college, of course, that business continued to allow me to be able to open up my first clinic without having to take on any debt, which again, when I look at it now, I'm like, I probably should have taken on some debt because I would, again, when you factor in leverage and the amount of money that you can actually, keep or whatever, it's sometimes is a lot better to do that. But I mean, it has definitely allowed us to be able to grow and to just pour that money back into the business as we've made profits, because we don't have any debt service on the property, but on the actual businesses themselves. But then my wife is the one who primarily does all of our bookkeeping for the businesses as well as us financially, especially in the beginning. Now we have a full-time staff accountant that manages our accounts and books and things like that. But at that time, we were just every quarter we would have to write, larger and larger checks. And my wife finally, she would come to me all the time and she'd be like, why are we having to keep on writing larger and larger checks? And I'm like, well, dear, this is a good thing, because the larger checks you have to write to the government means you're making more money, right? Mm-hmm. And so I always just looked at it as a good thing, right? Like if I have to pay more in taxes, that's okay because I'm making more money. And it was finally that we started when the check started getting over 6 figures in every quarter. That's when it was just like, wait a minute, I got to sit back here and try to figure out how can I keep more of this money so I can continue to grow this portfolio and of businesses, but also, trying to look at other assets like real estate to be able to help offset some of those taxes.
Yeah, I think that makes a ton of sense. I think as anybody continues to grow and a larger percentage and also larger dollars starts funneling out to, straight out of your pocket into things, that have no direct impact on your life, you start to think, why am I doing this? And how can I change things? And I think that's where a lot of people, especially later on in life or after they've built up something successful, that's how they kind of find their feet into the real estate game. And, really it's that tax side of things. I've been surprised at the number of people that I hear, just how you said, they said, I bought real estate because I was just making money in so many other ways. I didn't even care if these deals made money in the future. It was really just to stop paying money to somebody else that wasn't going directly to me. And it's from somebody that's not in the investment world or in the business world and hasn't been around larger sums of money, it just seems like such a counterintuitive measure. Why would I put money into something that's not making me more money? And it's just it's a net game, and what's going to ultimately net you the most. And let's also call a spade. Anybody investing in an equity position in some form of real estate, unless they're just crazy over leveraged or we get smoked in a recession, you're probably not losing money. Even though you're getting paper losses today, you're probably doing okay, if not great. So it does grow with you over time. So I think it makes a ton of sense. And I'm sure that avenue of research is ultimately what led you to looking into some form of real estate and ultimately into the multifamily space. Is that right?
That's right. That's right. Because the biggest thing is I didn't think I could actually scale enough with buying some of the smaller assets, whether it be a smaller multifamily or even just a single family home or a portfolio of single family rentals. I didn't feel like I had the scale in order to be able to take down enough properties to be able to really affect a large amount of my taxable basis. And so being able to go after these larger assets, I can invest a lot more money into multiple units, obviously, and it allows me to be able to reduce that taxable liability quite a bit, especially when you start to talk about doing cost segregation, which a lot of times on smaller assets, it just doesn't make it feasible.
Mm-hmm. So let me ask a question, because it's something we've spoken about, John and I, a lot with other people, and it's the route of taking on investors or not taking on investors. And it's always a pretty interesting conversation between the two of us and with other people, because we see both sides of the coin, right? We obviously, just like you, raise money from investors for these properties that we co-invest alongside with. But we've also done deals without investors or with only a handful, or something on our own. And there's pros and cons to both. What was the reason, or did you start off with no investors? What was the reason you decided to not just buy properties for yourself or with a small group of people and be the sole owner and eventually, expand into the hundreds of millions and the thousands of units that you guys have bought today?
Sure. I would say that there's two main reasons. So the first one I would say is the fact that I wanted to make sure that I could diversify my own investments into these larger assets, which are typically a lot safer investments than you would if you just bought one on your own.
Mm-hmm.
And I guess I would say there's a third level of reason too. So that would be the first reason. The second reason I would say is that I have a lot of people in my network. And of course, since I started the company, I have a lot more people in my network that were like me. Right? They had a successful business. They were in a successful job, whatever the case may be, but they didn't have the time to be able to focus on trying to invest in real estate to be able to have any effect on any of their investments. So they were just doing what most people do, and they just throw it in some form of a REIT or a hedge fund, or maybe they even throw it into an index or ETF or something like that, or just have just have their investment advisor manage their portfolio, but they really have no control over it because they don't have enough time to research it. And then of course they have this kind of fear of missing out, if you will, on investing in real estate because they see their friends doing it or whatever, and they just don't have the time. Right? They're busy, they're married, they have a family, and they got this job, and they can't take that time away to be able to do it. And that's kind of where I was really, because I had this successful business, but I didn't have the time to be able to focus on investing that money that I was making into real estate. And so for me, I made a cold turkey decision to just, on a Friday, I made a decision after I was at an event hearing a speaker talk about being the general in your business, to that I was going to step out and I was going to promote my COO at the time, who is now our CEO. He's been the CEO now for going on 3 years. Mm-hmm. I wanted him to be able to take over the business so I could step out completely. So I made that decision on a Friday. Monday, I discussed it with him. Tuesday, I made an announcement to my staff, and I haven't been back in the clinic since I made that announcement to the staff. And I have taken all of my efforts and fully focused it on real estate. And I know a lot of people can't do that. And there's a lot of people that don't really want to do that, right? There's a lot of people that are like, they see how much of a challenge and how difficult, even though people try to make it out to being like an easy thing, like this multifamily game is easy, which to me, all the different pieces in and of themselves, I would say are somewhat easy, but it's the multitude of all the different tasks and things that you have to do all at the same time, which makes it complex and difficult, right? And so they see that how difficult it is and all these different moving parts that they have to have, and they just throw their hands up and go, forget it. Here's my money. You invested for me, right? Mm-hmm. And that's really kind of the main focus. And then I would say the third main reason why that I wanted to be able to bring on other investors is that, and you probably know what I'm going to say when I say this, Chris, and you as well, John, is that when you have other investors that you are accountable to, it makes you better in making decisions on the investment. Because to me, I can sleep well at night if I lose my own money, but if I lose somebody else's money, I have a hard time doing that. And people ask me all the time, because we, even just in the last 12 months, we raised over $50 million for our acquisitions on the equity side. And this is a ton of money, right? This is a lot. And this isn't just from one large check. I mean, this is with over probably 350 investors in these acquisitions with this 50 million in equity. And they ask me a lot of times, they're like, well, how do you sleep well at night when you're controlling and have that much equity? I'm like, because we put our investors in really good, high quality assets, and I have to be able to do that in order to sleep well at night. I'm also obviously putting my own money into it, but it's a lot harder to sleep at night when you are putting other people's money at risk if you feel like you're not putting them in the right investment. So to me, it kind of sharpens me and making sure that our group places capital, not only our own, but other people's capital into great quality assets.
No, I think that makes a ton of sense. I know, that's one of the things that I've spoken about a lot is when I was first getting started, myself, my mom, who you've met, and my cousin, we're all partners on some smaller stuff, and we joint ventured with John on a couple smaller projects. And the last project we worked on before, the two of them kind of moved out, and I just focused on working for Toro full time, was an 86 unit deal we had in Jacksonville, Florida. And it's a deal to this day I said I would have bought if it was my own money. But we decided to walk on after due diligence and lose about 30 grand, give or take, because it was just too many unknowns going into it. We couldn't get a lot of the credit worthiness for the tenants that had been placed in the last 12 months because they brought it from 100% vacant to, 2% or 5%, whatever it was. And we couldn't verify that they were qualified tenants. Me personally, I still would have bought the property, and we kick ourselves because the property's done phenomenally well since. There was nothing wrong with it because our manager now manages it for the person who bought it after us. And we would have crushed it. It would have been a home run if we had sold it pre this, but be that as it may. But it was the same conversation where we looked at ourselves and said, hey, is this something we can realistically take down with the additional risk? We ran a bunch of different scenarios saying, what happens if 20% are bad quality? What if 50%? What if 70% are bad quality? And we just looked and said, this isn't something that we can justify to the people we're raising money from, that it's worth the additional risk than what we thought it was going into it. However, myself, I would have been okay with it because I was pretty sure that it wasn't going to be a problem and the risk was small enough that I would have taken it on, but I just didn't have the money to do it. So it wasn't even a conversation. But it's interesting to hear you say that because it's literally something we went through, and it's something we've had conversations on a couple deals. There's a couple other deals I know of that I said, I would have bought just with my own money because I would have sat on it because I think it's a great location and it'll do fine for the next 5 years. But I think between years 5 and 10, that area is just going to be so in demand. It'll just be great. But you've got to justify it on paper and have a reason to buy that deal for your investors, not just I like it. So I think that makes a ton of sense.
Yeah.
Yeah, no, I say that all the time. When people ask me all the time, what would you get started? How do you raise money? And I tell people all the time, if you won't buy it with your money, you can't bring it to other people. And then the backup to that is, if you would buy it with your own money and then you're going to sell it to somebody else or offer the opportunity to somebody else, you got to make sure, as you said before, you got to be able to go to bed at night knowing that you made the right decision. So whether you buy it with your own money or not is just the first question to ask yourself. Because if it was my own money and there was no one involved, it doesn't matter, right? I have to answer to myself. I have to wake up to myself. But I think the second part of that is, after you raise money or bring investors into a deal, you gotta, you have to explain everything that goes on day by day or, quarterly, whatever you're doing. You have to justify that and explain it to your investors. And if you can't, well, you shouldn't be doing it. So I think it's, important that someone says that, because I think a lot of, especially today, there's a million different syndicators and everybody's doing it. And I don't think everyone has the right intention. So hearing that and having it being out there on the record is super important, because you have to be able to go to bed at night knowing that you made the right decision, not only for your own capital, but for everyone else involved in that deal. I think the other thing that you said, this is self-serving to both of us or all three of us realistically, is that, I tell people all the time, what we do is not rocket science. It's not brain surgery, right? I'm not reinventing the wheel, and anybody can do it. And I had that conversation with, we have a monthly meetup that we did for a long time. I tell everybody, listen, anyone can do what we do. The thing that I took I did a complete 180 on that is, you're right. Finding a deal is easy. Raising the money is easy. operating the deal is easy. But when you put them all into one and you're sort of sitting in all those seats, that's where I'm the first to tell people now. It's like, listen, you can do it, no doubt. But do you want to? Because you don't understand the day-to-day challenges that come from it. So it may be easy, and we're not reinventing the wheel. We're not, as I said before, doing brain surgery. But when you add all that up, it's not as easy as it looks. So I'm glad you brought that up, because I think that, people, they hear us talking, and, anyone, someone dives into it and does it, and then they look in the mirror and they're like, oh shit, what did I do? I have investor money. This isn't going the way I got to do. How do I figure this out? And that's when bad things happen. So I'm glad you brought it up, Dan, because it's important for people to realize that what we do is not hard, but when you add it all up, it's not as easy as it looks. And the biggest thing is, like you said, once you take investor money, you have to be able to go to bed at night and justify every single thing you do. So it does make you sharper. Even when when I'm talking to brokers, it's like, listen, if it was my own deal, I'd buy it, but I have to go answer to 250 plus investors, and I'm not gonna go back to them and say, whoops, I made a mistake. It has to be what I want, or it's just not going to happen. So those are really, really good points that anyone, thinking about doing this or doing it should take to heart, because those are two things that will separate, and get you out of the herd.
I think the biggest thing is that people have to look at this as a business, right? You can't just look at it as a side hobby. I'm going to do this on nights and weekends. This is a true business. And so if you're not really ready or willing or wanting to actually start another business, because we're in the process of building out a team of people, right? We have a full-time director of asset management, we have a director of marketing and PR, we have an investor relations lead. I mean, we're starting to build out this whole team, as well as our own managing partners, and we're looking to continue to grow that, right? So if you are wanting to do that and you're willing to do it, then to support your investors' investments, you have to build out a team like that to be able to help manage that money. And I think that's probably the biggest missing piece, is that people think of this as just as a hobby or a side business. And I personally placed an LP capital in a lot of other projects. And I'm right at about 23 different investments and with 8 different operators. And I choose to invest based on, are they treating it like a business, right? Is this some sort of a side hobby where they're still working a 9 to 5 and they're just doing this, for fun? Because to me, I don't want somebody to be playing around with my money, right? I want this. They need to take this seriously. They need to be full-time into it. They need to have those full-time efforts. And so I think that that's one of the main pieces is that they have to run it as a business, and they also have to have some form of background and experience in managing and running a business, because at the end of the day, that's what we are doing. Is the whole syndication piece, the whole private equity real estate firm is a business, but then we're also buying businesses, which again is a whole other conversation we can have about, are we buying real estate or are we buying a business? Because at the end of the day, we're really buying a business that just so happens to have real estate associated with it.
That's an amazing way to break it down. And I think anyone listening, you're spot on. I tell people all the time, if you want to make this like a little thing that you do on the side, that's fine. But you can't expect to turn that into, blank, because it's not that way. Because like you said, you're running your own business. There's little businesses inside your own, like you said, whether it's different roles to fill. But then also, like you said, you are buying individual businesses. Yes, it may not be a hardware store selling, wrenches and hammers, but you are collecting income. There is expenses associated with it. And every single asset you buy is its own business, and it's got to be looked at that, and it's got to be treated that way. So I think those are important things you bring up, because I would agree. I don't feel like giving my money to someone that's playing around with it, right? Like If you take any money manager, right? If a stockbroker or financial advisor called you and said, hey, we're just going to play around with it, you're probably going to have a totally different reaction to writing that guy a check. Hey, we're going to gamble, right? Like, we're going to day trade options and just play around. Like, whatever happens, happens. Then to the guy that says, this is what I've done. I've had experience with my hands on operating, managing, doing this stuff. And this is what I do day to day. I wake up every morning and I eat, sleep and breathe real estate. And not just real estate, the intricate businesses that we buy. And every deal is a little bit different. Even if you have a generic acquisition criteria, they all have their own nuances. They're all in different submarkets. So I think it's important to realize that, because when you look at it that way, if I called people up and said, hey, I'm just playing around, give me a couple million, I don't think it's going to get as much weight as, this is, not only am I investing in it, but, this is what we do. We know how to do this. We do this really well. So I think it's important.
So I think one of the things that I would love to hear from you, Dan, is it's interesting to hear you. It sounds like you did some stuff passively with some investors and then you decided, hey, I'm going to do this on my own. Did you decide to take a step back and then start the business, or did you start the real estate company first on the side, get some momentum, and then take a step back and then really ramp up? And then secondary to that, and more importantly, is you guys have obviously done a tremendous amount of business in the last couple of years and scaled very quickly and effectively. How have you been able to do that over the last 2, 3, 4 years? Time moves so quickly. I forget how long it's been. So, those two factors, how's that been like for you?
Sure. So I went into it full time from the very beginning. So I didn't start small. I just basically went straight into it. We did full time, and I think one of the biggest things that we've done is we've made our entire platform investor focused. And we're not here to just bring an investor on to just one project and that's it. Our goal is to keep these investors on for many, many decades, grow our own wealth for our families, but also grow other investors' wealth and with their families as well. And so we are very investor centric. And we do a lot of things to make sure our investors hear from us in lots of different types of media. So we have our YouTube channel. We put some content out there. We have a monthly email newsletter that we go out. We do. We have an actual monthly email update that goes out to every single one of our investors in each one of our projects, right? So they are apprised as to how the project's doing. And then we also do monthly distributions. So we do a lot of things that we know investors are looking for. And then we also do some print stuff. So even over here, for those of you who are watching the video version of it, we have this investor newsletter we send out. This isn't just a cheap piece of paper that's sent out. It's actually a nice high gloss, usually a 12-page newsletter that we send out, and we educate our investors. We want to make sure our investors are understand the types of investments that they're getting in. And the more that you can actually provide that kind of education to your investors, the more they're going to want to invest with you because they're going to look at you as that expert. This is our newsletter that we sent out in May, and we have one here about why multifamily deals are falling out of contract due to the coronavirus, and then understanding the capital stack. And we have some custom graphics that we have put out in this newsletter so that our investors can actually see exactly what they're looking at. So when they get one of our investment offerings, which this is our most recent investment offering, you can kind of see here as well if you're on the video version. This is a nice, high quality, brochure, not really brochure, but investment package. It's usually about 60 to 80 pages, and we print these off. We mail these to every single one of our investors so that they can actually have something tangible in their hand. And so there's a lot of things we do there. And then we have an educational platform that's called the Multifamily Investor Nation. I do free weekly webinars every week. It's not a high-paid coaching program because I don't have the time for that. So I didn't decide to do a coaching program because I get a lot of people asking me about it, and I usually just refer them to other people that I know that coach, right? Mm-hmm. We do weekly webinars. Every single week we do those on various topics around multifamily to educate people. We have 50-plus meetup groups across the United States and Canada that actually meet on the first Monday of every month. Last couple of months due to COVID, obviously that hasn't been happening. And then, of course, I also get invited to speak at a lot of different events. And so I try to be in the industry as much as I can to be able to have people that are interested in investing, reach out and say, hey, I saw one of your YouTube videos, or I heard you on a podcast. And, we have our own podcast called the Multifamily Investor Nation. And so we get a lot of, leads from there. But I was actually just looking at it this morning. And this is the end of May 26th that we're recording this, 2020. I'm looking at my CRM dashboard right now, and it says we received 117 new leads off our website in the last 30 days. And so it's not like the leads have fallen off in the middle of COVID. I think they've actually picked up a little bit because usually we teeter around like that 80 to 90 mark every 30 days, and now we're almost at 120. And so I think that a lot of the different things that we're doing, which I always do what's called a multimodal approach to marketing to be able to attract new investors, or of course in our clinics, new patients, right? And so there's never really just one thing that just brings in a bunch of different leads. It's usually just that multitude effect of having so many different things that are out there working at different times that provides that consistent flow of leads that come in.
Awesome. I love that. I think That makes a ton of sense. I think it's something that we try to do similarly as well. One thing that we've spoken about, and I'm curious if it's something you've spoken about as well and or implementing, is paid advertising to generate investor leads. Is that something you guys have spoken about, implemented, and done? And if so, how has that been?
Yeah, so far we have not had any paid advertisements that we've done so far with our passiveinvesting.com group. Obviously, with the MFIN, I do a summit twice a year, so we do some paid advertising for that, and we pay for the monthly meetups. That's usually a monthly fee as well. But from as far as paid advertising specific to the passiveinvesting.com group, we haven't done it yet. We've talked about it. I've actually done some research and seen some other groups that have actually started to do that. I don't know what the success rate of it is, because usually I'll see people advertising that way, and all of a sudden, like, I'll search it again a month later, and they're not on there. So did it not work? Did they run out of money? Like what that process is like, I'm not really sure. To me, I feel like the best way to do advertising with this would be to do more retargeting advertising, where somebody goes to your website and tries to find out more information. They don't fill out your form or reach out to you, but you can still kind of retarget them on Facebook or Instagram, LinkedIn, Twitter, wherever they're going, or even just on Google banner ads when they're going on Bigger Pockets or wherever, and just continue to follow them so they can continue to see more and more of you.
Yeah, I think, the ability to retarget is both scary as a consumer, but super powerful as, whoever the marketing side is. It's something that I've only, explored the tip of the iceberg of, and it's crazy how powerful it can be. So I'm curious to see how it evolves. One thing I am curious to hear about, as well as, building up a successful chiropractic business, and then, in the middle of, or have built up a, successful real estate business. How similar has it been between the two? Were there lessons you learned from the chiropractic business that you carried over? Are they very different? Are you running it any differently? How is your other, venture shaped this new venture?
Sure. I learned a lot of lessons in the very beginning with that first venture, because in the very beginning, I'll just kind of be candid with you in that I have a condition that is basically saying that I believe that I can do everything better than everybody else. And
you and me both.
think I was going to say a lot of business owners and entrepreneurs have that problem, right?
Yeah.
And earlier on, I think it throttled my growth, right? It kind of stifled it in the beginning. And the moment I realized that was a problem that I needed to address was the moment I started to have that hockey stick growth. Because when you have that mindset, you feel like because you can do everything better than everybody else, that you should be the one doing everything that everybody else should be doing. And I realized early on that I needed to get out of that mindset. And I'll tell you, to this day, I still believe that. So it's a struggle every day that I still have to get over. So it's not like that's why I call it a condition, because usually conditions you don't get over, right? Or more of a disease, if you will.
Sure.
Right? And so it's one of those things where I'm just ingrained that way. But I had to tell myself earlier on that if I can find somebody else to do the task that I'm doing right now, and they can do it 80 to 85% as good as I'm doing it, then I can hire somebody to be able to do that. And of course, I always get surprised when I hire a good person and they actually do it better than what I could do it, right? But I still, again, have that problem. And that was really the main kind of pivotal moment for me in the growth, is basically saying, I know I can do everything better than everybody else, but I need to learn to delegate to other people. And the moment you can start to learn to delegate, and when I started to delegate, another flaw that I made at the very beginning was I tried to delegate it to the cheapest person I could find, right? Mm-hmm. And that's not always the best thing, right? You can usually find those diamonds in the rough, if you will, and they could pay them really low and still get a good result. But to me, I since then, I figured that out, that I really was just spinning my wheels, because I was trying to find somebody that really didn't exist. And I was trying to pay these low prices. But once I could actually pay what these people were worth, then I was able to find really good, high quality people that would stay around longer and actually did things better than what I could actually do them. And so that's what I've started to do, is I started to surround myself with a team of people that I know that do things on a very high level and can take us and kind of grow us to the vision that we want to be able to have for our businesses, not just the chiropractic or the medical stuff that we're doing, but also with the passiveinvesting.com as well. I think hiring on those key people, even in the beginning when we couldn't afford it from the cash flows from the business, we could actually hire them on. They could allow us to be able to take us to that next level as we continue to grow.
I think that's super important. It's a lesson that I'm definitely learning several times over the past couple of years. So it's very exciting to hear you say that. One of the things that I think I've personally not been as good at, and I'm sure a lot of people are, is like, where do you start? Like, what's the first thing you give to somebody else? How do you identify, obviously you want to give off your weaknesses to other people. If you're somebody that thinks you can do better than everybody else, it's probably harder to identify those weaknesses. How do you figure out where to start? How do you figure out how to bring that first person on to take some things off? And, how do you continue to build that?
Sure. Well, it's definitely a continual process, right? So It's not just like you're going to figure it out and go, all right, I want you to hire these 5 people. It's really, what are the day-to-day tasks that you're doing right now that really should be somebody else doing them, right? Where you can actually focus on continuing to do what your strengths are. So I'll just start off, before we even had employees, I was just myself, right? And I wanted to hire, I wanted to bring on other partners to complement my own skill sets. And obviously my role is investor relations with our group and overall strategic objectives. Well, I can do underwriting. I just don't like to do underwriting, right?
Mm-hmm.
I like looking at the finished product of underwriting and figuring out where the holes might be, where there are different things we need to be able to look at. But I don't like taking a T12 and a rent roll and filling out the underwriting model. I just don't like it. I can do it, but I just don't like it. Now, same thing with acquisitions. I don't like going to meetings with brokers. I don't like touring properties. I just don't like doing that aspect of it. Once you do a few of those, it's like, I've seen this already once. Like, why do I have to keep on going to these properties again? And so I can do it, right? But I prefer not to have to do that. And so I was able to find 2 other partners that filled both of those different roles that had complementary skill sets, so that I didn't have to do that. Because there's so many, like you mentioned earlier, I think John mentioned that there's so many different aspects of this business that you have to keep on moving. And the 2 main ones that you have to keep on focusing on is finding new investors and finding new deals, right? And obviously, after you acquire, you got to asset manage. So there's constantly 3 different things. And once you get into the business, is you have to never drop the ball on finding new investors, finding new deals, and also, asset management. And now with the 3 different partners that we have, I'm working on finding new investors. Brandon's actually focused on trying to acquire new deals. And then Danny is focused on really the financial due diligence, underwriting, and of course, he's over our asset management division as well.
Yeah, I think that's tremendous. I think one of the things that I've learned, and I don't think I'm doing it wrong, but who knows, is I've taken a long, hard look at what's that?
I said, I'll be the final say if you're doing it.
Yeah, that's true. Well, as we've talked about expanding, and we've actually started utilizing some virtual assistants for some of the more menial tasks for things like the podcast, social media, some of the stuff with Toro as well. It's been finding the things that we continually put off or don't do, because you make excuses not to do the things you don't like or you don't want to do. And I heard somebody else talk about that. And it's basically not that you don't want to do it, but you're making excuses to not do it because it's not done. Like the newsletter, I was supposed to do full exposure. I was supposed to do it last week. I hate writing the newsletter. John gives it to me every month. I fucking goddamn hate it. I know it's important and people want to do it, and I know it serves a good purpose. I'm just not a writer. I don't like writing. I don't like typing. Whenever I take notes, it's super shorthand. Whenever I send notes to somebody else, it's always audio or a video. Half the texts I send to people are talk to text. So that's something that I would love to outsource. There's tons of other things that I've just hated that I'm just like, hey, like I don't need to be doing this anymore. This is something that easily somebody else can be doing and allow me to focus on other things. So I think one of the things that I started realizing was, keep track of the things you're supposed to be doing, and the things that fall to the bottom, basically, of the things you're not doing. Try to find ways that you can give that to somebody else, or come up with a system that makes it easier for you to get done. So I've found that for me, to be very helpful in identifying things that, we can either bring in partners or employees or outsource to other companies or individuals. And I'm curious to hear if that's something that was similar for you, or you had a different way of discovering it.
Yeah. I mean, I would say that, one of the biggest bottlenecks that people have in hiring somebody, like I've used virtual assistants along the way until the point where I was like, okay, I need to hire somebody full time. One of the biggest kind of headset or mindset type things that kind of block us from hiring somebody is they're like, I don't know if I have full-time work for this person, right? They're like, oh, they can do this and this, but is that really going to be like a full-time job? And to me, I've always just said, let's go ahead and hire that person, because at the end of the day, they're going to probably fill their time with something else that we can help turn over to them, especially if it's just in the downturn, right? Or not the downturn, in their downtime, right? There's other things that we can have them be doing, and that person doesn't necessarily have to be in my office, right? Like we actually have an executive office, which is where I'm at right now, but most of my staff actually work remotely, even though they work in town. Right. And so they mostly work remote, but when we have meetings, things like that, they can come into town. And to answer the question about how do you figure out what, tasks you need to turn over. Yes, that's a great way to do it. If the tasks you just don't like doing, they just don't get done. But I look now at tasks and go, like right now, I'm since we've started the company, I've been the one on investor relationship phone calls. Like every single Tuesday and Thursday, I block off like all day Tuesday and Thursday. All I'm doing is investor phone calls. And so every 30 minutes back to back, I'm on an investor phone call. Well, we're to a point now where I really want to start to step away from doing that, right? Because I feel like we have enough revenue coming in from the asset management fees to be able to hire another additional person to be able to really do that piece of it. And again, my whole biggest bottleneck of not doing that as of yet is because, number one, there's cash flow, right? There's not enough asset management fees coming in to support that extra person yet, because we've had a couple of the people we had to hire. But then also because I feel like I do it better than everybody else, and I need to figure out, can I find somebody that can do it 80 to 85% of the way I can do it? And then I can kind of go out and actually focus on other parts of the business to actually grow it. And so me being in the president or the CEO position of my companies, I'm always in that kind of growth mindset. How can I continue to grow? How can I cast that vision so that everybody can be on top of it and be on board with it? And if I can't be in that type of a position and role, it's not where my greatest strengths are. Like I can do a lot of these different menial tasks, but when they all aggregate together, it ends up being an actual position, and I shouldn't be doing that. I need to be focused on the overall strategic objectives of the company and allowing us to be able to continue to grow. And if my role of doing that is starting to be stifled, then I need to find somebody else that I can hire to do that. And sometimes it's just an assistant. Like if you have a lot of like day-to-day tasks that is not really like a marketing position or a design position or whatever, hire an executive assistant that can help you. Because that executive assistant, you can say, hey, I want you to design this brochure. I want this article written in this newsletter. That executive assistant can now go out and actually find the copywriter to be able to write it, or the editor or whatever, or go hire the designer and start to build some of those relationships to a point where maybe you do need to bring in some design stuff in-house and things like that. And so that's really, to me, what I've done when I've started to delegate is try to have that kind of profile of all the different things that I'm doing on a day-to-day. And if it's not allowing me to be able to focus on what my greatest strengths are, which is growth and vision and overall strategic objectives, then I really need to start to find somebody else right now. So
I think that was, I might have to call Don up, my partner, and give him some props, because he's a little older than me, and he's been saying we just got to find someone and we'll figure out their tasks. And I always go against the grain of, we're going to pay them to do nothing. Let's find the perfect person. Because I say, you find someone and they do a lot of stuff. Are you really getting your bang for your buck? But I've been going back and forth on that. But the two things that I do, and I think anyone can take away from it, I try and do the thing that I hate doing. I try and get that done as quickly as possible. Eat That Frog, right? Brian Tracy's book. Like I try and get the thing that either takes the most amount of time or what I hate doing done as quick as possible. So then it's like, okay, the biggest task, the hardest task that I may hate doing is done. But then that coincides with, whether it's quarterly, monthly, okay, do the things I like doing, things I don't like doing on a piece of paper, and then whatever keeps going to one side, try and find that a person to take that over. But, Don agrees with you 100%. Let's hire somebody. Executive assistant is the role he always throws out there, because they can go bid out the design. They can go do that and come to you with 3 examples, and then you just sign off and say yes. So I think what you just said, take it with heart. And I agree with you. I have that same disease, condition, whatever you want to call it. I always look at it and I'm like, fuck this, I underwrite better. But am I really doing the right job by physically writing down 250 units in a rent roll? And I just don't think the answer is yes, because I can oversee it quicker, let someone else do it. And I run that same problem because I always think I'm better than the next person. The person that would definitely disagree with that is my wife. But anytime I meet somebody, I'm like, well, I'm better than him. I can do that better than her. It's and she says, no, you suck at everything. So,
Beautiful. I think that's an excellent place to wrap it up. We are coming up. We do have to hop off, but Dan, thank you so much for coming on. I think we could have gone another 45 minutes and had an excellent talk. So at some point we'll have to do a round 2 in a few months, hopefully when all this is over. But if anybody wants to learn more about you, follow along with what you're doing, get in touch, receive the fancy packages you put together, where and how can they do all that stuff?
Sure. So the easiest place to do that is just go to passiveinvesting.com. On the top right-hand corner of the website, there's a place there called Join the Passive Investor Club. You can do that. I'll jump on a phone call with you one-on-one to discuss your investment goals, unless I've hired somebody at that point to take that over. And then I also, if you want to learn more about multifamily investing, you can obviously go to multifamilyinvestornation.com, or even just look us up on our podcast, which is just mfinpodcast.com as well.
Beautiful. Thank you guys so much for listening to the episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. If you're already subscribed, please send it to a friend, a family member, a colleague that you think would enjoy it. We've also recently launched a Facebook group that I think will help a lot of you. It's totally community driven. We want to hear from you, interact with you, and know who the heck is listening to this podcast. So you can find that by going to Facebook and searching the Real Estate Investing Experience, or you can go to facebook.com/group/the REI experience. Dan, thank you so much again for coming on. This was truly tremendous. I can't thank you enough.
I appreciate you having me on, and I look forward to coming back again. Thanks, Chris, and thank you, John.
Thank you.